Welcome to Atlanta's Commercial Real Estate Show, brought to you by Bull Realty, the show for property owners and business leaders. Host Michael Bull brings you market analysis, advice, and opportunities around Atlanta.
Welcome back. Well, today we're talking about senior housing. Please welcome my next guest, Ernie Anaya. He's Senior VP with Healthcare Real Estate Services at Bull Realty, and his practice very much focuses on senior housing. Ernie, thanks for joining us today.
Glad to be here, Michael.
Well, Ernie, we just heard from Beth that some of the markets might be getting a little overbuilt in some sections of Metro Atlanta, which is quite a big market. Where might be some opportunities to add some new supply around Metro?
There's two things to consider when looking at oversupply in the Metro Atlanta. One is the age of the facilities, but another one is peeling back the onion. For instance, if you look at the average Metro Atlanta penetration is about 8%, but if you go to DeKalb County, where Emory University is, and it's a frothy county, there's a lot of wealth there, you have the 3.5% penetration. The issue there, though, is that the cost of land to build is very high, and getting the zoning done takes a long time. But another area is looking at secondary and tertiary markets, and there's some operators that are getting very savvy on doing that and being at 97% occupancy, stabilizing the property within 7 months and being very profitable. And that is looking at areas outside of Metro Atlanta that are in the bubble. It's still Metro Atlanta, but it's not Buckhead or it's not Marietta or someplace like that.
Yeah. And Ernie, you mentioned the age of some of these existing facilities. What do you see there around Atlanta?
So if you look at Atlanta, there's 186 facilities in Metro Atlanta, and the majority of them, about 70%, actually 60%, are beyond 10 years, 20 years, is very old. One of the statistics that I just looked at is that for facilities that were built 2 years ago, their occupancy is growing at 56%, where a facility that is 20 years old is actually negative growth. New product means a lot, but also finding the right market. And you really cannot, and you mentioned earlier that maybe somebody multi-family is looking at getting into senior housing and they think, oh, this is a good piece of land to build senior housing. Well, not really. Mm-hmm. You have to look at the demographics and you have to look at the competition in that area in order to make that determination. Just because it looks nice and it's near a hospital doesn't mean that it's going to be a good fit.
Right, and you've done a good job of doing those types of analysis for people. So what if I have one of these facilities, Ernie, that I'm seeing that maybe my occupancy is starting to decline, or maybe I'm having to drop my rates a little bit to keep occupancy levels high, and then at the same time, I'm seeing interest rates start to tick up. Do I need to kind of make a decision? Hey, should I sell? Should I renovate? Or
one of the things that I would take a look at is if you have a large portfolio, is to analyze the age of the portfolio and the trends on occupancy and rates, and then make a determination where you should dispose of those, or even bring them down to a more middle market environment where you're still getting it full, and because of a lower cost, you can still make a profit.
And if I do want to consider disposition of one of my properties or my only property, how's the market around Atlanta?
The market right now is still a seller's market. The issue is the inching up of interest rates that are affecting cap rates. Last year, you were looking at the 6 cap rate.
For the very nice properties.
For the very nice property. For their older properties, you're looking higher than that. So one interesting thing, depending on the size of your facility, is maybe looking at the conversion to 100% memory care. That is one of the hottest markets right now, or growth areas. For instance, I was just doing some analysis in Athens, Georgia, and looked at the CDC. They got a nice database that tells you the percentage of Alzheimer's. And Clark County was 14.6%, which is the highest county in Alzheimer's incidence in the state of Georgia. So by looking at those and the statistics and the demographics, then you can make a decision whether a conversion might be feasible, because now you can still be under market, but your rates are going to be a lot higher because you can charge $4,000 to $5,000.
And you mentioned that interest rates are increasing a little bit, and you said, maybe a year ago you might get a cap rate in the 6.5 range for a very nice property. What might that cap rate be today?
So if you're looking at the national cap rates, and they're looking at facilities that average 18 years is between 7 and 7.5. But that cap rates are always local. So if you look at the state of Georgia, and especially around Atlanta, Atlanta is a different market. It's a very hot market. For instance, a couple of years ago, a facility in Covington, Georgia, a rural area, sold for $386,000 per unit. And this was a smaller facility of 59 units. So it depends on the market, how you go.
Yeah. All right, we're going to take a short break. When we get back, I want to ask you some other tips for existing operators and where you see the market going in the future, because I think more and more people are interested in senior housing. It's like a lot of us are there's a lot of us baby boomers like me. Our parents are kind of going to these places, and then maybe we're thinking because demographics is going to be a growing environment. We'll learn more about that right after this short break. Thanks for being with us, and stay tuned. We'll have more after this.
The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL.
Raise the value of your commercial real estate project by telling your story to a national TV audience. CRE Groundbreakers, a new branded content series coming to TV this fall. Details at barnescreativestudios.com.
Welcome back. Today we're talking about senior housing. My guest is Ernie Anaya. He's VP with the real estate group at Bull Realty, and he focuses on senior housing. And Ernie, I think a lot of people feel like Atlanta's a great market. We feel like the population is starting to grow. When will the peak market be for senior housing? When will we see the most demand around Atlanta?
So if you look at the statistics right now, 2 years ago, we started with 10,000 baby boomers turning 65 every day. We're at the beginning of the wave. The majority of the baby boomers will not turn 80, which is kind of like the target, until 2028, so 10 years from now. So if you look at the curve, we're right here, and 2028 is going to be here, and still you're going to have a lot of more to come. So this cycle is going to last for the next 19 years. So that's key, because a lot of people are thinking, oh, the market is self-saturated. Well, not really, because we're not looking at it from a long-term perspective, just what's the demand today.
Yeah. And how much are new developers that you're working with on new projects, what are their main thoughts about the is it more about the market area? Is it about the site and what it's close to? Is it about the technology? What is interesting to developers today?
Developers are, for senior housing, are very astute. They're kind of like the retail, like a Kroger or whatever. They know how to take a look at the demographics to see if that site is going to be a good site. They don't really care more about ingress and egress or regress into the facility because they're looking more of a residential area, maybe near a golf course. But the demographics are key. You have to have enough people to sustain an assisted living facility. And you have to look at the age groups, 65, which normally the adult children, the 75, which are kind of like the active adults, and then the 85, which are kind of like the top group that are going to be going into those type of properties. And then from that perspective, look at what's in the market, what's the age of the facilities, what is the current rates in that particular market, what is the current occupancy in that market. If the occupancy is high, the met demand is high, the rents are high, that tells you that is probably a good market, even though it might look like it's crowded.
Yeah. Well, it sounds like there's a lot of work and a lot of information to really figure out the best site. So if someone's out there listening who has a site that they think is good for senior housing, for a fee, you come out and kind of do an analysis for them and let them know if it's a good site for senior?
Correct. So basically what we do is we analyze each site. So we looked at the demographics. We use S3 demographics to look at the 50 plus age groups, which include the 60, 70, and 80 plus. We also look at the net worth within a mile radius, We look at housing values, because housing values contribute to them moving into the assisted living facility. So the way that we looked at this, if you look at it, the Metro Atlanta area, there's urban, we look at it within a 3 to 5 mile radius. If you're looking at the suburbs, then we're looking at 7 to 10 miles. And then if they're rural, then we're talking anywhere from 15 to 20 mile radius. And then that will determine, if you have a good site. But you have to take a look at all those components. You have to take a look at what's in that market, what is the occupancy rate, the age of the facilities, and the rates, as well as the demographics. If you don't have the demographics to sustain the rates, you're not going to be able to be successful in that market.
Okay, well, that's a good tip. So let's say an operator out there is curious, Ernie, maybe they're starting to see a little decline in the fundamentals of their property, and they want to consider selling it. What are some tips for selling a senior housing property?
One of the things that I would recommend is not to wait till the last minute when you're seeing that your occupancy and your rates are creating.
Yeah.
You need to understand that right away and start making plans. You need to go into senior housing with strategic intent, where you know your holding period and you know your exit strategy. That's first of all. We can help you with that. Mm-hmm. We can look at your facilities as compared to other facilities in that area, and we can help you make a determination. And then the key, though, is that there's still a seller's market. So there's a lot of people trying to get into this market. Maybe the REITs might not be interested in buying an older property, but there's a lot of people trying to get in that have been into either the hotel business or have been into the multifamily business, that want in because they see how successful this market has been. So there's a lot of things that we can help you strategize with.
Yeah. Well, as buyers, better be careful what they're asking for, right? Because they're getting to a piece of real estate that really has a big business component, or operating a business to it, don't they?
Yes, this is definitely different than multifamily, because you have a component where you're actually doing personal care services. So you have to be licensed for that. You have to have certified nurses and assistants. You have to have an executive director. You have to meet all the requirements of the licensure. Yeah. So it's not just doing that.
Okay. Well, Ernie, great information as usual, and thanks for being with us.
Well, thank you for having me.
And if you'd like to know what your property would bring on the current market, or you want some tips to create more demand and more value for your property, reach out to Ernie or reach out to me. Thanks for listening. Thanks for watching. Comment, share. We appreciate connecting with you. And join us next week. We'll have another great show. Until then, have a great week.